All right, everyone, welcome to another episode of What's What VR. We have two new guests with us today. We have Jamie and Britt. How are y'all?
Good. How are you?
Hey.
Good morning.
Awesome. Well, we are date ourselves. We are what, the 20 or 31st, right after that storm. So everybody that
Yeah.
kind of blew through, but you guys made it through, survived. We have as well. And you guys are with the mortgage firm, right?
That's right.
That is
Correct.
us.
So let's take a round table. Everybody knows who I am, for better or worse. But Jamie, kind of give us a little bit about yourself and what you do and what's a normal day look like.
Yeah, absolutely. So, Jamie Taylor, I've been in the mortgage industry going on 15 years, originating loans right here in our community in Baton Rouge and throughout really the Gulf South. And so, I'm a loan officer and now branch manager for, the mortgage firm. We opened our new branch in October.
Awesome. Britt.
Hello. I'm Britt Boker. I also work with Jamie at the mortgage firm as a loan officer. I am originally from Baton Rouge, St. Joseph's graduate, left for a little while and wanted to come back. I have worked in business development for 15 years and originated for about 4 years. And I mainly got into origination because I wanted to make a direct impact in my community. So I'm back here with 2 kids and 1 more on the way. And I wanted a good partner. So we're here today.
That's right. Now we're here together, making home ownership dreams come true. And one of my main goals is really just to make the process as easy as possible. We kind of call it closing simplified here at the mortgage firm because it can be an intimidating process for people. They're, just hesitant to provide their financial information. They're nervous they're not going to be pre-approved, and so we really try to walk them through each step and make it really as easy as possible. At the end, we want them to say the loan was the easiest part of the process. And so I had a hard time, it was confusing when I bought my first house at 21. And so I really took the lessons that I learned from that experience and, do all I can to make it as easy as possible for our clients.
Absolutely. Yeah. Most, I would say, you guys might know, but most people, this is probably buying a home's the most expensive thing that they're ever going to buy. And
That's absolutely one of the most important financial decisions they make. So.
And 80% of people's retirement and wealth is actually in their home. And as we continue to see in this country is your equity is only increasing. So you're making monthly payments to have a roof over your head. And ideally one day you'll be able to take that equity and retire or give it on to further generations. So housing and financial decisions for housing is a big decision that, can't be taken lightly, but you definitely just need experts to give you kind of that guidance.
With increasing rental prices, it really just makes sense. If you have to pay for somewhere to live, you might as well, own your own home and pay towards owning something.
well, and we're seeing these apartment complexes go up everywhere. People are moving, but like you said, if you're going to pay $1,500 in a rent, I'd say pay $1,500 in a mortgage if you got roots and you're planted and you're going to be here, right?
Oh, sure. There's an 8% increase last year in this market, the Baton Rouge market, in rent. However, if you owned a home in 2021, you actually earned $12K in equity in that house.
Minimum, yeah.
Just in 2021.
Nationwide, equity increased 18%, something along those lines. So, but it's a great time to buy. Prices are going up, but like I said, so are rent. So you might as well put that money into home ownership. So, and we're here to help our community do that.
It's not going up right now. Everything's going up.
Yeah,
So,
this is true.
Exactly.
including the equity in your home is going up, right? People talk about it, it's all negative, but it's, if you're on the side already of home ownership, yes, these values are going up means you've got your assets worth more at the end of the day. So get in, join the train.
You bring up an important point, like during inflationary times, which we're experiencing right now, home ownership is more important than ever.
So tell me, this is, we talked a little bit before, but you guys are doing something a little bit different. Like you said, making it, simple. At the end of the day, there's a lot of people, if we're honest, that can do a mortgage for you. And then there's a lot of your toll-free numbers, a lot of your big boxes. And, those kind of guys. But you guys have done this differently. Like you said, from Baton Rouge, you guys are here in town. This is, you're not going to call a toll-free number and get somebody to show up at your house, or to walk and hold you through this. This is, like you said, it's a big process, and it can be intimidating. I can remember I bought a home early, and I remember almost like I found the house. It was my first home. I was young, still had a business of my own, but it was like, they were like, we need all of this paper. And I'm like, okay, I'm gonna have to go find it. And I went and found it. And then I almost like didn't want to give it to them. So I was embarrassed. I'm like, I don't know that I make enough money, and they're going to know everything about me, and I don't even know who this person is. Are they going to laugh at me and just hand it back and say, no? Or what happens if they tell me no? Do I just then turn around and leave? But I don't know what to do next. Like,
right.
You guys are doing some things different.
Yeah. So a couple of different things. What, I think separates us, first, all we do is mortgages. So, you go to a large bank, nothing wrong with that, or you go to these online companies. I think what separates us, first of all, is that we're just experts in one thing. We're not trying to get, checking accounts, savings accounts. All we want to do is help you with your mortgage. Okay. And that's what we do day in and day out. And again, we're staked in this community. Our names are known, with real estate agents. When you have a pre-approval letter from us, the realtors recognize our names, and it's a very competitive market right now. We'll even go so far as to call the listing agent, vouch for our client, let them know we've reviewed income and asset documentation. We're just going to go that extra mile that you're not going to get from a company that really is not set up to provide that kind of service like your big banks and your online companies. The other piece of it is, it's okay to be nervous. It's okay. But what we're here to do is, even if the answer is maybe not right now, it's what can we do to get you there so you can own a home? So if you don't find out what you need to do, you'll never get there. So we're here to provide that counsel, for people. We don't ever just turn people away without giving them a plan, to work. We're going to analyze their credit. We're going to see what they need to do to improve their score, and not even just to get approved, but also to improve their interest rate and, lower the PMI, make the overall terms the best that we can. So we again, going to go that extra mile for them.
Yeah. And, you were mentioning, there is a lot of options that you can do for mortgages, but as I always tell people, I don't necessarily, like, you wouldn't want me to do your surgery. Like, I am not qualified in any way to be your surgeon, just as much as someone's not really qualified to do your surgery from a far distance. You want to have someone who's local, who knows you, you've had multiple conversations, you got to know each other. We're kind of the people that you may even date for a while before you actually, get married to, because we're going to have a bigger picture. We're not having a one phone call and that's done. We're not just going to talk about rate. A big thing is you have to understand your monthly payment, not just your home monthly payment, but your expense monthly payment. There are a lot of expenses. And so sometimes we can get creative on what your financial goals are to figure out how can we make this house affordable for you, that you feel confident walking into homes, knowing what you can and cannot afford.
Yeah. And we want to be a resource. It's not just a transaction. We want to have a relationship with our clients throughout their life. If they have any mortgage related questions, I have clients call me all the time, and I might not be able to help them directly with a mortgage, but I have resources, know people in the community that can help them, with the needs that they have. So
I think it's, we say some of this, or I say this a lot when talking with people in our office. If you're perfect, right? If you're perfect on paper, if you've got the 800 credit score, if you've got, $10 million cash in the bank, and you have zero debt, and you can go buy whatever you want, that's a check the boxes and move it through. Very similar to where somebody, with one of our advertising packages, just wanted to call up and say, look, just give me, if they already know and can move it. That's where the difference, I'm trying to draw a line to where you guys come in, and also kind of like where our team comes in, where it's your advocates for that buyer to be able to say, hey, it's not just you're putting a bunch of numbers, keying it in and sending it off, to a mortgage, somebody who's going to underwrite. You're able to say, hey, I'm going to advocate, like, I know who this person is. This is who they are in the community. This is what they do. And here's what's about to change in their world. And then the first example that pops in my head, and I don't know if it works, and so I might be talking the wrong way, but when you have that relationship with somebody, you might have somebody that says, hey, I'm not ready to buy the house, or maybe somebody that you've been working with and they finally just got that raise that pushes them over to where, you know what, the last stubs aren't necessarily going to show it, but you're maybe able to get on the phone with someone and say, look, I've got their new stub, or hey, underwrite everything, or look at like this, and I'll have you a new check stub in 10 days, something like that, where you're able to kind of advocate for them versus somebody who doesn't know them, doesn't live in the community, doesn't know anything.
Right. Yeah. Right.
What else? How can they help them really? You know, if
Yeah,
they're not perfect.
Loans used to fit, back in the day, a lot of people, say, well, they would just go to their local bank and, we get upset about interest rates now, but you talk to anybody, over the age of probably 55, or they say, oh my God, I had a 14% interest rate. Everyone kind of fit in a box. Well, especially post-COVID, we saw how important housing was to this country. There was student debt that got taken away. There was foreclosures that were delayed. Evictions were delayed. It's obviously a very important thing. And so we now have a lot more products. So people may think, oh, I don't qualify because of this that's on my credit or et cetera. But the earlier you come to us and have us look at those situations, there are products out there that can fit a lot of people that think they
Right.
cannot qualify for a house.
Absolutely.
Would it be safe to say, and I don't think I'm not by any means trying to put you in one of these boxes, but I would think you see people that run to these like credit repair places and start calling people. And
This is
it's
Achilles
like,
heel for her.
Yeah.
well, my thought is, it's like, I have this analogy I use a lot in sales where I tell people all the time that like no one skips through the Home Depot parking lot excited to go buy a drill bit. They don't want the drill bit, they want the hole. At the end of the day, that's really what they want. So my thought would be that person like going to credit repair, it's like they want to buy something. They want to buy maybe the house and they go, well, I can't do it because I don't have the right credit. Why are you going to that guy? Come to you guys and say, let us look, we're going to tell you what, that guy can't tell you if you can get a mortgage or not. He can just tell you maybe, and that's debatable, if he can move a number, up and down and what to do. But you guys could do the same thing with a plan and say,
we can,
and we qualify right now.
We don't charge for that service. Okay. So that's a free service that we provide, is to analyze the credit. Do you need to pay down credit card debt? Ideally you would have those balances at 30% or lower. Okay. Per credit card. Do you have some collections? Well, let's talk about that. You may or may not need to pay them off. If they're old, you may not want to pay them off. It may drop the score. If they're recent, we want to go ahead and get those deleted. And that's key. So we're going to walk the client through what they need to do. And we don't charge for that. So why go pay for a service that, exactly like you said, they don't need to pay for? And we're going to also tell them if they qualify for a mortgage. So let's use that money you would use on a credit repair person, and let's take that money and use it to pay off things that may need to be paid off, or, have collections deleted. And, we were talking earlier, we've got some great news on these medical collections starting in July. They're going to, and basically these new rules are going to eliminate up to 70% of medical debt that's reporting on people's credit reports. So starting in July, the changes that are going to happen is they're not going to report medical debt for at least a year. Okay. Right now it's 6 months. And then in the first quarter of 2023, they're going to no longer report medical debt that is under $500. And I cannot tell you how great this is going to be for people's credit, for their credit scores. And it's going to help a lot more people qualify for homes, which is great.
So what happens, or do you know what happens on that retro? So the guy's got a bad debt, a write-off. It's been sent to a collection company. It's $400. Does that still sit there, or are we saying next, quarter, first quarter next year, it's going to disappear?
So, and it's important to distinguish the type of collection. So we're just talking about medical.
Right.
Okay. So medical debt, yes, if he owed $400 come the first quarter of 2023, it's going to no longer be reported. So it's going to no longer be on that credit report. And that's a big deal, because what people don't understand is once a collection hits the credit report, even if they pay it off, the damage is done. Okay.
To the score.
To the score. It has to be deleted. It has to no longer report, for it to no longer impact the score. So we're really excited about this.
That sounds like a big deal. And when we talk about scores, somebody told me the other day, in hopes that maybe somebody hears this and they'd call you guys to get the facts, because you guys are pulling the real deal, looking at everything. Somebody told me the other day, like the Credit Karmas and these things you can buy online, they're actually like your scores a lot of times are higher than what they're actually even reporting in a
That's
lot of those apps, that they're not accurate.
And we
Right.
do feel bad because it can sometimes be a little disappointing when they think they're
Absolutely.
800 and, they're 750, because it is a hard pull in your credit. We're going to be for mortgages. They're going to look at more history into account. So then you maybe would get on these credit karmas, et cetera.
Yeah.
It's
a different scoring
and it's not a
algorithm.
bad thing to know your credit score if it's free, to know when you're, just to monitor it. That we're not telling people not to do that. But there are, we even do an option for a soft pull, which is not necessarily going to be a hard hit on their credit, but we can start to advise them. Because really, if you want to buy in the next year, or you're even curious about maybe upgrading your house, you need to have a conversation with a mortgage lender, someone local who knows what's going on in the market, because otherwise, the worst situation is we get a call on a Sunday and they want to approve a letter that day, because we have to see some background information, and that just takes time.
Yeah.
And we want to help people get to the best score possible.
That's right.
So what are those steps? Like when somebody says, and I think you brought up a good point. I think a lot of people are saying, maybe we're going to move, maybe we're not. I don't know. They drive by the house on Sunday and they go, no, we're moving. That's the one.
Exactly. That's how it happens.
That is how it happens.
And they're like, I need it. And they said we have to close tomorrow morning. What can we do?
And it's that competitive right now. You better be ready with your offer.
That's right.
You're walking in. I mean, they're going in 36 hours, these houses. Because inventory is the lowest we've seen in February, was the lowest we've had in this market, Baton Rouge, and surrounding parishes in a long time. So you're seeing houses. It's not that the inventory is limited, but more than that, we actually have more houses that have come on the market. It's that they're going that fast. So you have to be ready.
The
to
month
purchase.
supply is down to almost nothing.
They don't. They last 20 days
The
on
steps
average.
are: you need to get pre-approved. You need to talk to a lender as soon as you think you want to buy a house, because as soon as you get it in your mind you want to buy a house, you're going to start seeing houses, and then you're going to want to take the next step and put in an offer. And I mean, you're really going to put yourself at a disadvantage if you don't have all your ducks in a row with having the pre-approval ready, having, let the, lender let us review your income and asset documents. If there's any questions that we need to get answered from underwriting, we can get that done up front. If there's anything you need to do with your credit to put yourself in the best position possible, we can advise you of that and, and go through all of that. Talk about your numbers, your monthly payment. Where are you comfortable? How much cash do you need? These are all very important conversations you need to have before you even start looking at the first house.
So tell me, it would seem, and I like to think of myself as somebody who tries to be prepared to move, quickly. Would it be smart for somebody now? I don't think people are buying a house today and then next month buying another one. And, they're not doing it at that frequency. But if you've been in your home for a couple of years, and if it's come up, what I call my wife and I sit on the couch at night after the kids have gone to bed, and that's when the real conversation, that's when decisions are made, right? Everything happens between 9 and midnight, anything of importance.
Adult conversations.
Yes. And so would that be, fair to say, if you've had those conversations, and if it comes up every so often, like maybe we should move, or maybe we should just look, that's the cue. I have a rule when we say I fly airplanes as a hobby, and we always say, if you ever say, well, should we take off or should we go? The weather, it's like, no, at that point, when you ask the question, the answer is already no. So I could almost apply the reverse rule. If you're saying like, maybe we should just look, that would be the cue to say, you're not committing to anything. Call you guys up and you're going to say, here's a list of what we need. We can do a soft pull. It doesn't have to be hard. Give me income statement. What would somebody need to pull together just to where you guys could come back and go, hey, we've got a pretty good bit of certainty that we could get you approved at X. And would you want somebody who maybe is not 100% committed to buy to stay in some regular cadence with you, to where it's maybe every so many months, it's like, hey, can you update this? So when that house does pop up on Sunday, they kind of always got that approval in their back pocket, or is that?
Oh yeah, absolutely.
And
then, we've even had to update approvals because rates have obviously gone up quite a bit. it's the fastest increase in the last 20 years that we've seen. So you want to make sure you keep that, updated. But historically speaking, rates, are still very low. And so it's still a good time to buy. But generally speaking, the documentation they would need is most recent 30 days of pay stubs, last 2 years W-2s, your bank statements, your driver's license. If you're self-employed, we're going to need the last 2 years federal tax returns. That's kind of the basics, really.
But everybody, as you said, we talked about earlier, everyone's a little bit different in their scenarios. And so, you really have like the two different buyer pools. You have your buyer pool that's a first-time home buyer. So it costs you zero money to understand where you stand at your potential to buy. Additionally, once you get that pre-approval, a lot of people don't know as a buyer, you're not paying for that real estate agent's time. The seller is going to be paying for that. So, you really don't have anything to lose to know what you can afford and to know it's out in the market.
To have representation. That's very important.
That's huge. And so that's kind of the first people. Then the second people that are having those nighttime conversations, maybe they are in their first house, they have one child, they're like, okay, we need to upgrade in some way. And they say, oh no, I hear all this doom and gloom on TV and the news. Is this all true? Where we,
right. There's nothing to buy. Rates are too high.
And there's a lot of opportunity on that because they don't know how much equity they have in that first time, that house they're in,
right.
They just know what they pay on their loan payment. They don't really understand the bigger picture of what's going on in the market. And then two, we try to educate people. Yes, you may be paying higher mortgage, but we could, depending what your equity looks like, we could actually craft it to help pay down some of your debts. So your monthly expenses are going to be lower in a bigger house.
Right. We relatively the same. Yeah, exactly. So it's worth exploring. It's still a good time.
So what's the rule of thumb from a cash position on down payment that people, obviously, like we've said a million times, everybody's different, but,
right.
We're still doing, down payments are still a thing, right?
Oh, yeah.
You need to bring something.
Money is still a thing.
Well, the down payment's going to range from no money down with your USDA loans, okay, to the conventional loan minimum's 3%, FHA is going to be 3.5%. But even if we pre-approve you for the USDA loan, which is no down payment, it's really important in this market to save enough money for your closing costs and prepaid items, okay? Because it is a seller's market right now. It is tough to get them to pay your closing costs and prepaids. So even with a no down payment loan, you need to have some money saved. And it also just strengthens the overall file and would help you get approved if you've got some reserves. Okay.
And the kind of the rule of thumb on an estimate, if people just want it in their head, it's 3 to 5% for those closing costs of the loan amount. So that's kind of a general, rule. Now it can vary because what we're seeing in this market post 2016 is we are seeing homeowners insurance quotes drastically change to protect those insurance
and flood
companies
insurance
and flood insurance. Yeah,
flood insurance is a real thing. So,
yeah, real thing.
That's a whole nother.
You could probably talk for someone for a long time on that one.
That's a whole nother show right there. So one of the things, that we were talking about earlier, I wanted to make sure, Britt, you brought it up. I think it was actually before we even started that you guys, the big box, I get big box, big, lenders, the online lenders, I guess we call, they're not the one sponsoring the baseball teams. They're not in the community. They're not there, supporting. They're not answering the phone in the middle of the night. That's you guys. It's a service across the board. So it's, if you don't care about that, then so be it. Do what you need to do. But if you need someone that can take you from we maybe are going to do this to you can do this, and then just those pre-approvals and things like that, you guys are going to stick with them all the way through. And I'm assuming like, hey, you didn't find anything, your pre-approvals expired. Hey, if you bring me XYZ, I can get you another one. And would that be something that you would want to do for somebody to kind of keep carrying them along?
You're a counselor, an advisor, and we've got all those same technologies that the online lenders have, so we have the hybrid e-closes, the online applications. We have software that can verify your income and your assets without you providing pay stubs and bank statements. So we've got all the technology and the
Mhm.
service. So it's the best of both worlds, truly.
And I think there's something to me, like there would, at least for me, there would be a confidence factor to where if you've been through all of this, kind of pre-approval, you've got a relationship with you guys to, make up a number, just, 200,000. If that's my letter, to drive around, town, just to go about life, and to be able to see a house and go, oh, it's 200. I could buy that if I wanted to. I could make one phone call right now and say, we're going to buy it.
Yeah.
Right.
To me, that puts you in a more confident position to A, to negotiate, but B, just in life, to be able to move
Sleep
through
well at
and
night.
go, if we want to do like, yeah, we could buy that one, but I don't want to. Let's go look for another one. It
Right.
changes it rather than, I remember, like I said, when I bought my first house, I just drove around. It was before all the online websites and everything. Drove around, saw a sign, was like, oh, I want to buy it. And then sat there in limbo for weeks. Like, can I buy it? Am I going to get to buy it? And it's just this whole, it consumed my life to where this could be, we want it. I want it. Tell the realtor we want it. Tell you guys we want it. And let me know when I need to come. And you can move on. That seems like that would put everybody in a much better
And the
position.
sooner you buy, the sooner you start building wealth.
Yeah. And, you had mentioned, we talked about kind of the idea of what, you all do with your publication and really just trying to be a resource and making those connections. We're here, we're invested in the community. We want to see housing increase. We want to be those cities that people want to come live at. And, we want to be the welcoming community. And the only way, you can do that is as good as your word. If we say we're going to take care of you, we will follow you through the process, because nothing gives us more joy to see you, at a kid's baseball game saying, oh, we just love our house.
Yeah.
We're just so happy we did this financially, everything. And, you mentioned, like, yes, we do feel like it is a hard question to ask people for a lot of this very personal information. Our goal is to not care about where you are financially. We're caring to make sure that you're financially in the right place to buy a house. So the number can be, $100,000 house or a $2 million house. You're still someone that we want to put in a place where you can go to bed at night. You can drive down the street knowing you can afford what you have.
Yeah, we have a
Right.
vested interest in our community, right? So this is where we live, work, and play. Yep.
And I think, not to beat up on, all the big apartment and rental property guys. I'm a rental property guy. I've got some, but at the end of the day, I would have to say, by and large, most people, if you're in an apartment, especially one of these newer complexes, and depending on where you are around town, if you're paying your rent, the cash flow is working, right? Like, you can afford it. It might be that you just have some credit things to work out, but if you're planted in Baton Rouge, I'm not going anywhere. I'm stable. I've got a stable job. I'm paying my rent every month. That's where hopefully whoever's listening, it's like, hey, you need to pick up a phone. You need to make a call, because at the end of the day, you may not even know what you want right now, but you're paying rent when it could be, your mortgage at the end of the day. It's not like, oh, I can't afford a house. You can. You're paying probably more than what the house would
It's
cost.
not your own.
Yeah.
Exactly.
Yeah, exactly. And you know what?
So-
It's important for college students to know that they don't have to graduate and work for a full 2 years. They can buy when they graduate, essentially. I mean, I bought right after I graduated from college, my first house. We can use the time that you spent in college as your quote unquote employment history, as long as you're working in your field, in your field of study. So that's important too, for those guys to know.
That's good to know. That's because an apartment, get into a house. But be smart with it, because when you own the house, you got to fix the house. You can't call the landlord to come fix it.
Yeah.
Absolutely. But I kept that house and ended up renting it out. Just like you said, you're a rental property guy. So it's an investment, in your future. So
Absolutely. Well, I appreciate you guys coming and spending some time with us today, kind of filling people in and what you guys do. We'll put some links in the, here in the description and all that kind of stuff for people to be able to see it. But for anybody who's listening, is there a quick phone number to throw out to find you guys, or what's the easiest way?
Really, honestly, we operate with ourselves. We want to be that, you want you to have that direct line of communication with us. And so my number is 225-921 225-354-4003. And Britt?
And I am 225-354-6397. And yeah, as you said, I mean, those are our cell numbers. That's when we work, you know, so our kids know when we're picking up the phone and we're talking to someone, they know that it's in order to help people. So we want to be that resource.
Absolutely.
I think we've all learned. My kids have learned I can grab the phone and just like hold it, point it at them, and then go. They've learned the symbol, like this is a work call, you know.
Yeah,
that's right.
So
we appreciate it so much, Brandon.
Well, no, we'd love to have you come back, you know, maybe talk and just kind of maybe we do another show. We get into some of the weeds of kind of like, what's this process look like? So that somebody knows, you know, okay, well, I get all this stuff. And then maybe we kind of could role play working through like, what's it actually look like?
Yeah.
You know, to actually
it
do
won't be
the
nearly
whole
as
thing.
intimidating if you kind of know what to expect, for sure.
Right.
That's
happy to do that.
I think that's the trick is people, you know, there's I forget the psychological, what they call it, but when you don't know something, you know, your mind's going to fill that void with something worse than what it probably actually is. So,
yeah.
So look, we'll get it on the schedule.
Yeah.
I appreciate y'all stopping in.
Thank you so much.
Have a great day. Bye.